If you think you're doing great on your Vanguard ETF, VUG, you should take a look at private equity. I just got my prospectus and rate of return report on my VUG. By way of disclosure, I own Vanguard. I think it's great. And it's not unusual when I look at my report here to say, gee, I made maybe 32% last year. Although I have to remind everybody that in 2022, I lost about 33% on that Vanguard ETF. That's the cost of investing in an aggressive growth fund with a wonderful company that's very low expense, but things have changed. And a thing that's happening in the industry is called the democratization of private equity. And what it means is on the private equity side, you realize that now private equity is not only going to find its way into your 401k at work and into your investment portfolios, there are now new funds available to people to even invest in the pre-IPO companies like the next Tesla or Starlink, any company that hasn't yet gone public. When the market took a substantial drop in 2022, you know what happened with private equities? They didn't have any correlation to the stock market. That means that the private equity investments did not go down. Now, past performance is no guarantee of the future. Here's my disclaimer. Meet with your financial advisor, and you should see if private equity fits in as a part of your portfolio as what we are generally calling alts. An alt is an alternative investment that is not correlated to the stock market. That means it doesn't act like equities in public markets. Is it always going to be 245 versus 34% rate of return? No, I don't think so. But I will tell you, everybody who has a portfolio of equities should have some stocks, some bonds, some cash, and some alternatives. Alternatives add a lot of aggressive growth potential. You could also lose your money. It's like every equity investment. There is no great return without great risk. But I will tell you, adding some alternatives to your portfolio can give you a substantial opportunity to, number one, make more money, but number two, possibly not lose as much money when the market goes through its predictable and reliable corrections. Every 7 years, there's about a 20% correction in public markets. This is normal. This is healthy. If you look at any chart of the stock market, like the one I have here in my hand, you're going to see that. I'm not suggesting that this is right for everybody. However, it's also the responsible thing to know what your options are with investing. And the rules have changed dramatically. They've been liberalized. A lot of the rules about being an accredited investor and having to have many millions of dollars are gone. If you're interested in wealth building especially, or portfolio protection against market fluctuations that are in the public markets, now is the time for you to look seriously at private equity investments. To get more information, to get a copy of our report, subscribe to the channel. Leave us comments below. If you have any questions about this, we're happy to answer them. Reach out to us online, and we will help you find the right financial team to help you place alts in your portfolio. Because having a well-built portfolio is just part of the art of being smart.